Hey, what's going on, guys? It's Will. Hopefully, you're having a great day today. In this Saturday session, we are going to go over the main companies to focus on for this upcoming week. Going on, guys? It's Will. Hopefully, you're having a great day. And I got to turn off my live. There you go. So, when we jump into it, first of all, to be transparent with you guys and show you what's going on here, for those of you guys that aren't familiar, we just now got to a point of almost 20K here on YouTube. So just want to thank you all. Appreciate you all. Thanks so much. And looking forward to having some special announcements here as we reach 20K. There are some definite technologies that I'm excited to release here that are for optimizing some of the investing strategies that we do. And we should have some new ones launched to you. We got this profit calculator, which we launched earlier this week, which is exciting. We'll probably use it here. And then we also have our predictive analysis that we're working on. So a lot of things happening, and it's awesome. Thanks so much for tuning in. So let's jump into what we got going for this week and what companies we may want to focus on. I was just driving back from lunch here, I guess a little bit later in California for lunch, or earlier than most places. And I was thinking about the upcoming week, and I thought one of the things that we're probably not putting enough focus on is that the assets are still down from their peak. And while people think the market could correct down and further down, it is possible, and we could not predict the market, but we can, come up with some plans and look at a map strategy. This is 3 steps. You guys have probably heard this, right? 3-step strategy analysis. If you're tuning in for the first time, you haven't heard it, but we go through 3 steps to identifying good deals in the stock market. And today, we're going to go through them so you can comment your ticker symbols if you have them, if you're invested in any companies and you're wondering, what's next, or what might you want to know that you don't already know, or if you have a plan, let me know too. Don't just comment the ticker symbol. Tell me what you actually are planning to do with that company and how you plan to invest in it. Why are you investing in it? Is it the short term? Is it a long-term play? Is it because of their technology? Is it because of their financials? Is it the news? Tell me why you're invested in it, what the reason is, so that when we break it down, I have a little bit more context. And if you tell me your plan too, the plan you have with it, that helps as well. So we'll start it off here with some AI companies. We're in AI and large language models. Really quick, just to preface, we did a full video on AMD earlier today. If you guys aren't familiar with the stock, I would encourage you to simply take a look at that video. We covered the Starlink partnerships that they have. So their chips are going to be in the Starlink satellites. You can see that here. They're Versal chips. And that's really exciting for them. But they also just purchased a company recently. They purchased a company that is for large language models, so they can run, not just have their data center revenue, but build revenue in large language models. And we're pretty bullish, and we got a position that we opened up on Friday. So just thought I would let you guys know. Full breakdown on Friday. So we got a comment there from Uncompromised One, which I'm always excited to see his comments. Yeah, I feel like you're always on the money with commenting and bringing insights. So appreciate it, man. Leah says, "Hey Will, thanks for the stream. I'm interested in BBAI. How do you think about the next week?" Yeah, we can take a look there. And then Savor the Sky says, "I buy VOO every week, but as my short-term play, I have positions in UNH, so United Healthcare, I believe, and Rigetti." Got it. Okay. So let's start off with that first one. Wishing you guys a good weekend. Hopefully your Saturday is treating you well. So let's take a look. We got BBAI. So Big Bear AI is a stock that we've been covering for a couple months, really since back here in November or October, around $1 a share. And some of you guys are saying, what's next? It's really started to push up. We're seeing some more momentum with the company, and what might be, the next move. So we did one on Friday, but let me kind of, break down what this looks like. So from a trend perspective, things have looked fairly good with BBAI. You can see these levels right now where it's kind of bouncing between, and there's a strong support there at $3.85. And we're saying, maybe it holds there before continuing up, or even sells down to this 350 before continuing up. But overall sentiment is pretty bullish. If we take a look and just get rid of these levels, kind of take a step back. Our long-term positions, it shows we're down here because we got a short-term position there. But that's because we actually sold for a profit. And then after we sold, there were still some shares remaining. And so it continued to sell down. So we made a trade earlier this week that was about a 20% swing from this $3.70 range up to this $4.80 range. And that was one of the biggest trades of the week. Outside of that one, we didn't do too much. And now we could start to see the trend dragging out just a little bit. But overall, it's had this upward momentum. You see this kind of pattern that's been developing. And not only that, we also have the resistance also looking pretty consistent there. So overall, this is how it's looked, right? Now, if it's going to hold this level that we mapped out at the 380, this is the type of move that we might expect, something like this. So that would be kind of staying in this trend, continuing into the highs, and it would be possibly that move up there to that $5 range. It's about a 20% increase. So it's, fairly a large margin for profit. But even before the profit, you kind of look at it. The risk, if we're going to manage it, let's say on Monday, and we'll see how it opens, but we'll most likely have a pretty tight stop if we're doing a short-term trade. Long-term trades we're still holding. We have a $2.80 average, even though we started covering it back at $1, just not fully. It started moving so quick from $1 up to $4.50 at one point. So anyway, but now since April, it's been trending up, and this trend has been very consistent. And now we're looking at this risk of having a stop loss below that 380, but looking for that margin of profit of about 28% potential in the short term. Now, the long term looks promising. I'd say there's a lot more margin for error being like, okay, if we're going for the long term positions and we're just holding, which I'm fine if it keeps selling down or whatever happens. But on the short term, that's the move we're looking for, about a 28% increase. If we end up potentially sizing in on a position like that, we're talking about, potential thousands of dollars if it happens. But again, all we can do once we get in is have a plan. That was kind of why we put together this plan, this profit plan here for you. So I want to give you an example. Like, this is our trade calculator. The reality is I can do technical analysis. I can show you guys things like about support and resistance, but those are just probabilities that we could slightly all just take all of them into consideration. And we want to take them into consideration so that we can stack all of our probabilities towards what could be a greater gain for us. But outside of that, the reality is, while the long term has a more sure direction, the short term has much more volatility. So we don't know that's going to like perfectly do exactly what we want, right? If we look at it, yes, it looks like lower risk. Margin for profit is about 20 to 30%, and it looks very good. And if that happens, excellent. The continuation of the trend, great. But otherwise, we don't know. And what happens is you have to have a plan in place, because people ask me all the time, how do you know when you're at a peak or at the bottom? I'm saying, well, you can look at the support and resistance, and you can look at the financials, you can look at the news, you can look at all those things, and you want them in your favor. But ultimately, you don't know because somebody could sell, or somebody, you don't know what could happen. There could be news that comes out, we don't know. But we do know that we can have our number one advantage, which is not only having those probabilities stacking as much as we can in our favor before we enter a position, but also when we enter that position, we have a plan in place. So for example, like what's the current price? It's at $3.86. So let's just say, I just purchased, 375. It's at 386. And how many shares do we have? I'm going to ask you guys, how many shares collectively should we have? Well, we're just about to hit 20K subscribers, so maybe we should do 20,000 shares. What do you guys think? Cool. Awesome. Yeah. Okay. I see you guys' comments. So Ted says, hey, Will, do you see Redwire pulling back this week? We definitely take a look at that, Ted. So how many shares should we do? We're going to go ahead and do 20,000 because that's how many subscribers we are just about to hit. Oh, I don't know. Actually, Leah says 9,000. Ryan says 1,000. All right. So what do we hit? Let's add them all up here. Kenneth says I have 52. So we'll do 10,052. Unless you guys are adding more shares, comment below how many shares do you think we should purchase? Go ahead. How many shares? This is funny, right? 9,000 plus 1,000 plus 52. So Leah, Ryan, and Kenneth, that's what we're going to do. So we're going to do it. 10,052. It's going in. No more shares. Going once, going twice. Are you any more? Oh, someone says 12,450. Oh, geez. All right. 12. Oh, no, you guys. Oh, I'm going to have to get my calculator out. This is actually ridiculous. Okay. 12. All right. I'm going to add them up. 10,050 plus 12,450. So that's like 22,502 plus 2,000. So like 27,502 plus 1,000, 20, is that 28,000? 28,502 plus 3,267. So that's like 31,819 plus 1,000, 33,819, around 30K. All right, I'm just gonna say 100,000. All right, 100,000. Okay. All right, so basically this is like the plan, right? So it's giving us the percentages. So if we're going for profit here, let's say that we're going for that, like, let's go conservative. Let's go for like a quarter of that 28% swing. So let's go for, somewhere in here, just under 10%. Let's go for 10%. According to our calculator, just under 10% profit would be about $4.12, be $36,000 profit. $36,000 profit. All right. So do you guys kind of see? So it basically says, if you want that much profit, consider selling at that price for a profit and set your stop loss at this. And it's like, hey, you're in profit. Review your targets and your risk. So that's kind of how the calculator works. A lot of people have been saying they've been using it on their computer alongside their trading, and I'm like, awesome, totally free to use, and I'm glad you're able to do that. Cool. All right. So as we're looking at Big Bear, that's kind of the outlook. What do you guys have for tickers? There's some tickers up there. I'm going to take a look. We're going to have to do that one again. That was fun. Okay, so Spider said, oh yeah, it was Redwire. So Spider says BBAI will potentially gain some space recognition. Yeah, definitely they got a space connection there. Leah says, I would like to know what you think. How many shares are good for building a long-term investment? And what should be a good size for a short-term trade? Really appreciate the point of view. Yeah, of course, Leah. I would say that when it comes to, like I would say challenge yourself to, go at it with a positive attitude, like be calm about it. You don't need to go in like super huge with a huge investment. Just do like, whatever 10% of what you earn, invest that. 10% of what you earn is like a good that's a good, you'll be good if you do 10% of what you earn. So I would keep that in mind. Okay, let's go. So we got Redwire. So Big Bear AI, that's the margin for profit. It's about a $33,000 profit on our calculator according to that. Okay, let's look at Redwire. I was able to actually meet some executives at Redwire, and it looks like the last time we did analysis on it, let me just check on our YouTube real quick. Is that all right? Let's see. Oh, geez. Our videos. Let's see. When was the last time we did Redwire? That would have been a while back. Let's see. Yeah, okay. That was a while ago, over a month ago. So this was the chart that we kind of mapped out here. We got to go meet some executives, and we went to the Space Symposium over in Colorado Springs. So they had an event where they announced a big contract. And if I extend kind of the pattern, it's actually stayed quite true to trend. Now it's looking more on the overbought side on the short term, according to this trend. But when we look at the potential of, let's see, August 2024, it was at $5. It rallied consistently up into that $27 price point. And then it sold off after that, and it's been down to $6.30 in April. So from February to April, it sold off big, down to $6. It was in April when we made that video. So let me just see. It was April 9th, and we said it's building momentum. And if we go actually click on this video, and I don't need to have audio on it here. Oh, never mind. I don't want to see an ad. That's okay. Anyway, what we were looking at was this big contract that they recently signed. So the market that they're in is space. So they're a space company, and I know that they focus specifically on partnerships with like Air Force Research Laboratory. And one of the really unique things about Redwire specifically was I was talking to this Air Force Research Laboratory dude. He was like so big. I swear he looked like a Spartan from the, not like the Spartan from 300, but from like Halo, like, but without his armor on. So I'm talking with this guy. He's telling me about the technology that they work with and the different contracts that they have. Public information, but getting kind of like a one-on-one consensus from the guy that's actually working with the other companies. And so he told me that Redwire had some technology. Let me pull up their website. That's rather than focusing, like a lot of companies have this LiDAR that's from the satellites in space. It's a LiDAR, and it like shoots the LiDAR, and then it comes back and they read, different things. Rather than doing that, they were developing like a very, very, very high-tech camera that was like, it looked like this huge microchip. It was this camera that, rather than having to do the LiDAR and get really scattered data, they were able to have better data because they had this extremely high definition camera that could literally see what was happening very, 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 very far away, and would get accurate readings rather than relying on the LiDAR. So then they had an announcement that they were part of, I think it was this multi-billion-dollar contract. So we can go back. It must have been right here around the Space Symposium. This was when I was there. It's right around here. And they announced that they got a big contract in the multi-billion-dollar range. So let's see, it was 2024, and it was right here. Yeah, it was April right here. Okay. And then they have some contracts with Rocket Lab as well. And that's a really big key for them, because in a space company, space. It's really growing fast. And it says the company is manufacturing satellites for the Space Development Agency under 515 million in the contracts. That was news on Rocket Lab. And this is why I'm getting confused a little bit, because we were trying to go directly to the source, and it took us to a third party for the news. There we go. That is correct. So now we can see directly from the source that they signed this iSpace US here. It was a contract I was there for. It's a $2.6 billion maximum value through 2028. And it's an indefinite quantity contract, meaning it came from IDIQ. You can see that they announced it at that space symposium that we were at. And that was one of the big advantages. I remember feeling so tired. We had just got back from a quantum computing conference. I'm like trying to stay up to date with these companies. I was feeling exhausted. And I'm like, oh, guys, should we go to this? And you guys were like, go, Will, go. We got to do it. We got to get the information. And I was like, okay. I submitted my info, and they gave me a media pass, actually. So they gave me the full media. I think it was here at Tier Riley. I got a full media pass, and I got to go to the Space Symposium for free. It's like a $3,200 value. And so we made it there. We were tired, but we got some good information. And basically what we found was that Redwire, super legit and super fast growing, as they're a newer company. They're a newer company, but they're with Air Force Research Laboratory. They got that big contract coming in, and then their stock has been on this consistent uptrend. So when you go back into the Redwire Outlook, and we can go to their stock here, it's RDW stock. The upside for what we're seeing in their financials was starting to look more favorable. About when it comes to their market cap, $1.4 billion, and their quarterly is improving. And I see Jzev says, see you keep adding every day. I think that's probably for Big Bear. Leah says Arista. Yeah, we could take a look for sure. And Ryan says, great calculator, man. Awesome. Yeah, I'm glad that you enjoyed it. And Sean's like, our post says, which would be the better option to invest in, NVTS or CTM? Yeah, we'll take a look there. And we'll take a look at that one, John, on HUMA. So when it comes to the operating, for Redwire, they did have their revenue kind of taper off a little bit. But it was April that they got that contract with iSpace. So while it's at $61 million reported, that was for quarter one, and the quarter two numbers could surprise, actually. So that's why we had some focus on it, and why it might potentially have a breakout, even though it's already looking a little overextended. You see they really cut down their total liabilities in that last quarter as well, from about 344 million down to 247 million, which means that they kept their total cash and short-term investments up 66% year over year, and total assets up 21% year over year, outpacing the 16% of their total liabilities. So that means they're making more than they're losing. They're making more, and that their net income was almost literally zero. Like it was almost even on their last earnings. So we'll see how this new contract ties in, and when they report earnings, it's going to be interesting. What we got here is that resistance. If they're going to sell back down, the conservative approach for Redwire from analysis perspective, like the financials look good, the news look good, but when you look at the chart, it does look more on that overbought side there, and that it would sell back down into like that $16 range somewhere in here if it's going to stay true to its current trend. Now, that wouldn't be crazy. In fact, I think that would be pretty normal, and I wouldn't be surprised if that happened. Now, the upside is pretty obvious there as well, though. If you're looking at the breakout potential, there's that strong resistance at about $18.50, and it's just below that. So if it breaks out above that, maybe that could be a new level at which it could find support and make its way up into that $27 range again, which would be from here about a 47% increase from current prices. In the long term for Redwire, I would imagine they're going to build market cap more and maybe not be as prominent as like a rocket lab, but definitely, with the NASA contracts, they're building, this is a contract they just got about 3 days ago that is approval from NASA to advance cutting edge manufacturing technology for building infrastructure on Moon and Mars. So when it comes to the value and what they're doing, I mean, lunar missions, NASA contracts, this is part of a $12.9 million award to prototype Mason for broader plans to support a long-term presence and exploration on the lunar surface. So again, could be a nice contract value, and we could potentially see their next earnings come in very well. So that's why we got to watch closely as they approach their earnings. So Redwire, that's the margins for profit. That's kind of the risk. And that's why, again, like right now, I wouldn't buy it on the short term because it does look overextended. Long term would make more sense, but I would look for either a pullback or a validation of that resistance that it starts to potentially act as a support. So hopefully that makes sense. Cool. All right, so the next one we got in here, there's some good ones on ARM Holdings, and Arista. So Leah says Arista. So Arista is an interesting one, actually. We've covered it a little bit. And this is a company that builds data centers, right? Is that right? Arista. Let's see. Let's take a look. Well, that's a video of mine with an ad. So that's not what we want. Let's do Arista. It's called like Arista Networks, right? Data-driven cloud networking, introducing intelligent innovations for AI networking. So they, if I'm not mistaken, specialize in building softwares and products for data centers. And when it comes down to the value that they provide, they're kind of similar to that of like a super microcomputer. So they have these racking systems for data centers, which is very, very needed. It's something that's competitive. It's a market that's getting more and more traction. And you can see they have Etherlink switch, ultra scalable, smart distributed system that builds on foundations. And they have the technologies for basically running the data centers. It's a good industry. I mean, when it comes down to the profit that we're going to expect, it's going to be more and more. And they got an ecosystem for cloud networks. So from a product perspective, I think that they're on the right track. From the company news, if I'm not mistaken, they've had some significant contracts. And what I'd like to do is go ahead and just take a look at their financials. So we can just kind of take a look. So when it comes to their market, really fast growing market, ANET is the stock, ANET stock. All right, so you can see $122 billion market cap, so it's up there. Take a look over at their financials here. Financials, PE ratio slightly high, around 41 million, or 41.0. When it comes to their financials, they're seeing increases in their revenue quarter over quarter pretty consistently. They had an all-time high on revenue this last quarter of $2 billion in the quarter, which actually makes a lot of sense now that their market cap is so high. What we see there too is their net income also increasing. So that's indication of growth. Check the last 4 years. You got this steady increase of revenue and net income in the positive for ANET. And then when we look at their year-over-year growth, it's about 36% up on their net income. So really nice there. The balance sheet, I like it. Yeah, I mean, it's great. Actually really reminds me of like AMD stock. You can see their year-over-year growth on the balance sheet where their total assets are very well outweighing their total liabilities. And from a cash flow perspective, things are looking pretty good. Looks like their total assets did go up about 41%, while their total liabilities went up about 47%. So that's a slightly, like there's other benchmarks you could look at where if you see a higher liability increase than that of their assets, then that could be just something to watch, because you obviously want to see their assets increase more than their liabilities. So that makes sense. But yeah, good margins there, Leah, for sure. Financials look good. Their news looks fairly good to increase. Right now, I mean, what we're looking at here is two things. You got pretty strong levels that it's mapped out previously in this trend. You got this uptrend where it was just like absolutely so consistent. And you could see that right here. So you got this really consistent trend upward, and then it broke pattern, pushed below the 200-day moving average, and now it's starting to push back up and potentially make it back into previous levels. So if we're looking at it from a perspective of, just seeing it as, wow, what a sale it was back in April. That's great. The perspective is that if it's able to find levels, let's take a look here, of more growth in their stock, the technicals point to some bullish momentum if they can hold this $90 price point. It's like a $90 to $92 price point right here, previous resistance, then previous support. There's some consolidation there. And then where it's kind of consolidated and it's now kind of toying with this level here at around $93. What we'd look for is a break above that $92, $93 price point. And that's where it's at right now. It's at that $97 price point. So the margins for profit here on ANET, if you're long term, I'd say it looks like a cash flowing, increasing company that would make a lot of sense as data centers will continue to see growth in the future. In the near term, there's been some volatility. It's at this 200-day moving average, which may act as a resistance. And we would look really, I mean, if you were doing a shorter term swing trade, it would make sense to, set a stop or manage risk around this 92 to 94 price point, but look for that swing of getting up into these levels of that, $115 to $130 price point. I mean, that would make sense to me in how we kind of enter a trade with ANET. And, we can also kind of run it through the profit calculator and see what that would look like. So like right now it's at, I think, $97. So let's just say we were to buy it right now. And let's just say that it's at like 98. And yeah, let's say that let's say we got, what would be realistic? 1,500 shares. How many shares should we have? I'm going to have like a second calculator here so that I can write all the shares if we do that. So basically we're going for that. What was the margin for profit? About a 36% potential. And if that were to happen, like let's just say we're going for 20% there, that could potentially be, a very nice profit, right? We're talking about like, even if we were to invest or have that many shares, yeah, it's like a $10,000 to $20,000 profit. It would make sense that it would do that if it holds this level and AI continues to get the momentum that it's getting, which it is, and that the markets continue to rebound, which they have been. So with those things said, I think that trade would make a lot of sense. And potentially, actually, I could see us looking to enter it. I'll have it here on my watch list, which I already do, but we'll be watching it closely at market open for sure. Awesome. So the next one we got here. So I saw it was NVTS and someone's saying NVTS or CTM. I have no idea about NVTS, so we can go ahead and pull it up here and see. All right, so it spiked an insane amount here in the last 2 weeks. It spiked about 200%. There's no real consistent pattern, although there is a slight market cap decrease. We can take a look at it real quick. Just for all of our time's sake, since I don't know this stock and everything else, I'm not actually gonna. I'm gonna start here with the financials, and then if those things check out, then we'll keep going. Okay, so NVTS, Navitas Semiconductor, I think I've heard of them. They got a $1.2 billion market cap. When we take a look at their financials, net income has been, drastically lower than that of their revenue. We look at the net income holding between, a dozen and 3 or 4 dozen million negative. So revenue has been actually declining over the last quarter over quarter for the year. If we take a look at the annual, it's pretty volatile there. Slight increases in revenue year over year, but the net income highly volatile. And then we got the annual. So annual looks like they're increasing their total assets for the most part year over year, but not quite so much in 2024, with their total liabilities sitting pretty low there. So when it comes to the year over year growth, it was really happening up until 2024. Their net income super inconsistent. I don't know why, but if you look at it, super inconsistent. Those yellow, the yellow there. But what you can see is the very consistent revenue actually increasing quarter over quarter there into, or year over year, but decreasing there a little bit quarter over quarter this year. So let's take a look at them. I'm okay with kind of taking a look at their product offering and see what they got. NVTS. So it's Navitas Semiconductor stock, and we will go directly to the source here. Looks like they're focusing specifically on data centers, mobile and electric vehicles, next generation clean energy power semiconductors. And let's go straight to, so their applications, they got data center. Let's see here. All right, so they got standards for power supply, current energy usage, and so as a result of growth in AI, energy consumption is by data centers is rising rapidly. Data centers from International Energy Agency suggest that in 2022 alone, approximately 460 terawatt hours were consumed. So you could look at the power demand increase. So they're using that. This is all true. Early AI chip evolution, talking about AMD there as well as NVIDIA. And now they're talking about how that relates and where they come in. They're saying CRPS power supply from form factor, and they have these very, very technical outlooks of how their chips work. Then they have minimized power consumed through losses in power supply. Industry standards have been applied. The key standard for PSU sector is the 80 plus certification. Okay, 80 plus, got it. Okay, materials for PCUs, silicon, wide bandgap materials. I've heard that that's very interesting. Actually, that's a good one to look at. And they don't tell me about their product as much. I guess that there's an outlook of their product, but I don't know how it is that they're going to, justify that their chips are, let's say competable. I guess they have their own chips, they're making their own chips, and potentially these chips could be as powerful as what, like NVIDIA chips? They talked about AMD and they talked about that, but honestly, I would have to go way deeper to really understand this. I would need to talk with somebody that very much understands this. So I can't really tell you guys too much about it. They've had a lot of manipulation or something extreme happen recently as their stock surged 220%. And when it comes to their news and press releases, let's take a look at their latest news and see if something happened. They partnered to provide next generation hydrogen fuel cell charging, and that's okay. Yeah, I'm not finding anything that's justifying this. For me, I wouldn't touch the stock until I understand more about it, because honestly, 200% increase in the last 2 weeks seems crazy. That's cool, but I don't really know why. So let me know. Let me know. All right. So Boss Ball said, a Boss Ball head dog says, Warren Buffett said buy and don't sell. I'm stick to that. I have GBTC at 6, Bitcoin at 16.9, Palantir at 8, Applied Digital at 4, and many others. Sold too soon. Now I'm 97% ETF, stock CTM BBAI, Tilroy, Rich Tech Robotics, and holding. Got it. Yeah, I mean, when it comes to those companies and everything else, realize Warren Buffett says to buy index funds. But he doesn't buy index funds, does he? Just keep that in mind. I don't know. I really like to live by do what they do, not what they say. But I also really like what you say there about GBTC at $6. It was funny. I was in a gym working out in my hometown years ago before I moved out. And I remember I was at this gym, ran to this guy. He's telling me he used to like take people or he used to do the Chinese New Year because he was a father of one of the kids that I used to go to school with who was Chinese. And he would come in and he would celebrate Chinese New Year. And we'd do a dragon and like fireworks stuff and everything. And I saw him at the gym and I was like, what's going on? And it was 2018, 2019. He was like, are you buying Bitcoin? And I said, I have like a little bit of Bitcoin, but I don't have much. He's like, buy GBTC. I'm like, GBTC. He's like, yeah, grayscale, buy grayscale. I'm like, okay. And I looked at it and I think it was around $3 or something like that at the time. And I purchased some. Yeah, I got some. I don't know what it's at now. What is it at? Is it at like 60? Something like that? And but GBTC is a great long-term investment. It's like an index fund. But if you're gonna buy GBTC, I don't understand why. Like, I didn't get to ask him this. It's been years. I should ask him. But why not just buy Bitcoin? Like, why not go direct? Anyway. But yeah, nice picks there. All right. Here's what we got. Sharon, how about Sealsq? We can take a look there, Sharon. Great call outs, guys. So yeah, there's a lot of great tickers you guys have brought up here. Yeah, a lot of great things. So I hope you have a great weekend, Leah, and thanks for tuning in. Absolutely. Yeah, so when it comes to, what was that? CLSK, we can take a look there. Ticker symbol. Let me know why it is that you're looking at that stock, Sharon, before we jump into it, so I can kind of know what the thought process is. And we could keep that on track. Yeah, the most important thing when we're looking at these companies is that I know why it is that you're bringing up that company. Is it like, do you have a plan around it? What's your entry? What's your exit? Is it the support and resistance? Is it the financials? Why are you pulling it up? And that really does help. So we got to take a look at some different stocks, a lot of different stocks with some potential for this week, and it's exciting. When it comes to CLSK, we do see this slight market cap build. We've seen some manipulation or maybe just some high horse moments back in 2021 when it went crazy and then sold off. Then it started to build market cap January 2024, sold off mid-April in 2024, and had been selling off ever since, and it's still holding below that 200-day moving average right now. So you could see you do have a slight market cap build there over the last year or so. See that right there. So it's possible you get maybe a swing up, but at the same time, you got it below the 200-day moving average, and then that resistance there, right? If it's resistance, it's selling lower and lower. So yeah, kind of a key moment, right, for them. They found a support there right at about $8.40, which was a previous support. And the next level of resistance looks like they're going to be met at about $12, somewhere in here. Seems like that next level of resistance. If not, it's going to be this 200-day moving average that pushes them back down. So let's take a look at the margin. So if it's going to continue this trend right here, it actually looks kind of possible because, and I got to look at the financials real quick and do that analysis. Do you know what industry they're in? Let me know that. Because what we could see here is, let's go back and let's really take a look at the trend. So there's this recent trend developing here where there's this rising supportive resistance rising support right there, and rising resistance right here. Okay, that's how I would kind of identify it. It's trying to hold above that moving average. It's trying to make this move up here to continue this trend. So that would be how that looks. Be about a 20% increase up into that $11.80 range there. And we'll have to take a look, see. So Sealsq, what is it that they do? Sealsq. CleanSpark. CleanSpark. A lot of short interest apparently here, according to market beats. Investors are closely monitoring it. There's high short interest, maybe some volatility. Let's take a look at their financials real quick. Jump in. Okay, net income and everything else, pretty volatile. On the annual basis, they got a lot more revenue, but still negative net income, but increasing revenue, so maybe figuring things out. Balance sheets, annually, they're increasing their total assets big time. They're up to $1.9 billion in assets with the liabilities of $200 million, and increasing quarter over quarter on their balance sheet. So financials actually look fairly good. So what is it that they do? That's the question. So let's take a look. And these are great because I actually would like to dive deeper into these with you guys. So this looks like a Bitcoin miner. So they're financially going to focus on building out systems for mining Bitcoin. Okay. I like it. I mean, obviously they're growing right now. You could see that they have, tremendous add to their balance sheet. So as a Bitcoin miner company, it could make sense to consider them. Like we got Mara, it's a long-term play. There could be tremendous volatility. Now this makes more sense. Like start to see it push up alongside Bitcoin. So this 21% margin is kind of what I would look for. And I most likely won't trade it unless we see some big, that we went over some other opportunities that were in the 20 to 30% swings. And so we're looking, it's possible here that it continues this trend, perfectly up to there. But maybe even a sell down, you look at the RSI and the MACD looking overbought there, potentially would sell down to $9.30 or $9.50 before making that move continuing up. But yeah, it's a good call out. Like I actually very like the recent pattern. It looks like it's potentially having this reversal, and it definitely has an overall market cap build. You could just take a look and just kind of see it building its market cap. So yeah, nice call out there with Sealsq. Awesome. Great. Yeah, and then so the next stock we're going to take a look at is from Paul M, and he says SEZL. SEZL. Yeah, I mean, probably won't be trading this stock, but we could take a look at it. SEZL. They're pretty new, I guess. And let's go ahead and get a better picture of the company. When it comes to their financials, they're definitely starting to look better. At least that's how it is indicating in the last quarter. Start to see their quarterly beating their revenue, and increasing year over year, up over 100%. So financials actually do look good there. Annual, yeah, pretty consolidative, but it looks like it's up there. And then quarterly, they've been increasing their total assets and reducing their debt, actually looking quite good. Take a look at they're a financial company. And just to review, what was their market cap at? Their market cap was at 4 billion, and they're bringing in how much revenue? 100 million in the quarter. 4 billion, and they're bringing 100 million. Yeah, I can see it. Okay, and buy now, pay later. Okay, and they got partnerships with Amazon, Walmart, Airbnb, Lyft, DoorDash, Uber. If you ever want to buy your quesadilla but not have to pay for it right away, you know where to go. So when it comes to the company's market, they're in a growing market. I think a comparable would be like Klarna. Does Klarna have a stock? It's not publicly traded. What's the other one? You could do like a firm. I don't know if they are public. They are. They're at like $19 billion. Okay. Let's say that. So right now, this other company is already at 4 billion. And the revenues that we saw are about 7 times bigger than Sealsq. So 7 times bigger than Sealsq, which means a firm is 7 times bigger, and their revenue is only about 6 times. It's pretty relative. It's actually pretty relative. Pretty close. So what you could expect maybe is like if they start to get more market cap and they're building, the long term looks pretty good. On the short term, I wouldn't touch it. I mean, it just looks very overbought, and I could imagine there's going to be a sell-off. Looks like there's been a huge uptrend. You can see the RSI, the MACD, just way overbought. But yeah, I mean, if it had a more consistent pattern and sold down and was a better deal, then I would definitely look at it. But it's just not a very good deal. When you compare it to other markets, it's like slightly overvalued compared to some other ones that are in the market. And then also it's way overextended right now. So yeah, of course it could always go up, but like there's no reason, like I wouldn't be able to feel like the good entering it because the profit margin is like almost non-existent and the risk is so much greater. So that's why we wouldn't trade that stock. Okay. Limitless says, I still love LAES, 21K shares, looking for a $1 billion market cap. Love that. Yeah, I mean, we could take a look real quick. LAES. If I'm not mistaken, they're in like cybersecurity, quantum. Is that correct? So they broke out of the downtrend they were in after that big sell down from $11. And they started to push back up in this $4 range and sold back down. There was a lot of manipulation on the stock previously. That's why I don't cover it so much. We could take a look at it real quick from a financial perspective. Looks like they got a $420 million market cap. Their net income's negative and their total revenue is negative as well. So far financials look okay. And take a look at their quarter over quarter. Actually shows almost nothing here. Okay, quarter over quarter is indicating that their net income is just very negative and they're losing money. And their revenue declined. But let's take a look at annual. Annual, they had to kind of increasing revenues and then declined in 2024. Their balance sheet, though, let's take a look. All-time assets are up in 2024 and increasing much greater than that of their liabilities. So their balance sheet looks pretty good. When it comes to LAES or Sealsq, they also, let's just take a look at their side. They're in cybersecurity and semiconductors and quantum security solutions. Examines the interaction between quantum computing and semiconductors to develop the next generation quantum resistant secure microcontrollers and related trust devices. I'm not sure what partnerships they have. Right now, I really like the marketing, but the first thing I'm asking is, well, if quantum computers' biggest challenge is that they don't have data stored, then would it make sense that a company that's specializing in security is going to be able to turn profits if data is not actually something that is really dealt with when it comes to like quantum computers? Unless we're talking about a different type of quantum. Let's take a look. That's just my first initial impression. When it comes to the, you got a quantum threat, so I'm assuming they're talking about with the advent of quantum computers, the next big problem is going to be most likely security of that data. It says we're entering a new era in which quantum computers will replace, in some cases, classical computers and will be able to solve within reasonable time issues that were known to be unsolvable. The first error-corrected quantum chips like Google Willows have been announced, and the threat level for current protocols is rising. Slightly. And also, the error correction is fundamentally in the quantum computer itself, and the chips are less, like they are a focus, but the biggest focus is the fidelity of the quantum computers. Because if the quantum computer in itself is not able to like produce error correctable results, then it's not going to be able to even be a conversation as to whether the chip that you're using is going to have error correction. Okay. Slightly interesting. All right, they got a webinar they recently did. Looks like there's some direct to the company analysis we could do. So let's just take a look at their recent media and their news releases here. News releases. All right, Sealsq and WiseSat next satellite launch scheduled for mid-June from California to advance quantum safe space communications. The company that focuses on developing and selling semiconductors partnered with WiseSat, scheduled second week in June, marking first satellite to embed Sealsq's quantum root key. Sealsq intends to invest $10 million in this. Okay. Got it. Okay. All right. So they're going to invest. Cool. Is there any indication of some contracts that are worth money for them? Let's see. News releases. They're investing money for sure. They're investing money. Do they have any contracts? So they just have a strategic partnership with Solana. That's interesting. Okay. All right. I'll have to go deeper. But when it comes to the technicals, I think that there is, right now, it's looking a little overextended. Start to see it push up, but still having the overall downtrend. Maybe breaking out, it's possible as it's above that 200-day moving average. There's a resistance pretty strong there at 436. So that 436 level right here, you can see there resistance right there. That's where it did get rejected. And so I would watch that level closely and keep a close eye on it. Yeah, interesting. Recent rejection shows a little bit more downward momentum. Interesting. Cool. APLD and data centers. Yeah, Limitless says needs to close above 388. Yeah, I actually see that, right? That's a previous resistance there. That's another resistance which it will have to face in order to break out. That's a good call out, though. I mean, it's an interesting one, right? Because quantum, and I don't know that I think they're too far ahead at the moment. I don't know that. I think they're so far ahead that it could end up biting them just because of like the data not being an issue, because they're still figuring out how to store data from quantum computers. So that's kind of the way that I see it. But it's a good call out. And it looks like they got some volatile financials. So not anything I would choose to invest in right now, but I do appreciate the call out. Awesome. All right, there's quite a few more here from you guys. I'm actually just going to cover one more here for you all, and we'll take a look. Sammy, I appreciate that. APLD, we just did an analysis on APLD just a few days ago. They have a partnership with CoreWeave. Long term looks good. Short term volatility definitely expected. Now let's go into, Kamal says, how about SMCI? So we'll take a look at Supermicro Computer here and jump right in. Supermicro Computer is a sleeper because they provide a lot of the infrastructure for the data centers, which is exciting. And also they have partnerships with companies like NVIDIA and even xAI for the racking systems and the different things that hold the hold the GPUs, not the QPUs, in the data centers, which is a really good place for them to be, because partnerships with NVIDIA and especially xAI, it's kind of like when we saw AMD partner with Starlink. When we know that a company is working with one of the private companies that's really crushing it, it's usually a good indication that there could be some growth potential that other companies aren't going to be able to tap into. So I like that with Supermicro Computer. And Supermicro Computer does have this resistance here. We actually mapped them out. This must have been a month or two ago, right here at $44 a share. And it tried to push up here on Friday. Looks like it got rejected. We saw some highs back at the beginning of 2024 of about $120 a share. And at one point it was, very high up there. And their market caps, I'm sure, in the billions of dollars at this point. And they're starting to make this recovery. And what we're kind of watching here, and what we've been watching for a couple months, is that push above that $45 price point. We start to see that push above the $45 price point. That would be good indication that we'd start to see this recovery take place. Getting up into these levels, the next resistance would be about $64, which is a really good place to be. So if that's where they are currently, right here, there's a little more risk, of course, that they could make this sell down. But they also dealt with some financial news that was saying, they don't have their reporting out, that they were going through audits. There was even a rumor that went out with some articles that said they were no longer partnered with NVIDIA, where then a month later, NVIDIA reported earnings and said, yeah, we appreciate our customer, Supermicro Computer. And we're like, wait, what? They are partnered? So Supermicro Computer's gone through a lot of bad press on some things that were fabricated. So fabricated, in fact, that when we were analyzing the data center market, I did a video on Supermicro Computer, and there was this article from Yahoo that said that they were no longer having some partnerships. And I did an article. And this is actually the reason why when we do our analysis, when we go through the analysis stage of the financials or the news, literally we only go straight to the source now. Because at that time, I did that video on them from that Yahoo article, and some people sold. It was right around here, actually. Or no, it was literally right here at the end of the year in November. And it was right here when the article was coming out. I did the video, and some people sold, apparently, which you should never sell based on what I say. But then it continued to rocket up 20%. And people were like, Will, what happened? You said that they weren't partnered with them. And I'm like, oh my gosh, that Yahoo article was fake. It turned out the Yahoo article was fake. So that's why I never, ever since then, for the last 7 months, and since I started this YouTube channel of the analysis, we haven't done any non to the source articles in basically ever. So that's anyway, funny story. People got upset, and then I made a video saying I'm sorry. And then someone said after the new analysis they made money, and then they like gave me a tip of $20 on YouTube or something like that. It was actually so funny. They're like, nice owning up to your mistake. And so when it comes to Supermicro Computer, good partnerships. They are pushing above and holding above this EMA now, so more bullish momentum. They got that resistance at $43, but it looks like they're trying to push above. If they, for some reason, go bearish, something happens, they could sell down to that $30 range. Otherwise, the next target is actually to get back up on their trajectory and getting back into that $60 to $70 range, which from here would be about a 45% increase. And as I said, there's still risk as they're getting rejected by that $42 price point. But if they start to validate that resistance as the support starts to push up, then that would be a good deal in my eyes to potentially trade Supermicro Computer on a swing trade or something like that. So we'll be watching it closely here in the near term and potentially at market open to see if any opportunities present themselves with all these stocks that we covered. And just so you guys know, if you ever want to join us in our daily live sessions, we have StockMate. It's the second link in the description. We go over the best AI, quantum, tech, and space stocks. And you can get our daily live trading sessions where we go live at market open every day, Monday through Friday at 6:30 a.m. Pacific Standard Time. And you get fundamental analysis, technical analysis, and there's also some books in there as well. And I don't know if I can like pull it up. I might be able to. See if I can pull up inside. I don't know if I can. Yeah, I don't know if I'll be able to because I'm signed in on a different. Oh, maybe it'll work. Let's see. Here we are. Can we get into StockMate? Boom. All right, we made it in. So some really cool stuff too. Like if you guys ever want to get weekly Zooms, Lawrence, one of our members, just commented. This is the first link in the description. I just did a class, our third class on Wednesday. And I just want to read with you guys what Lawrence said. He says he ended up making a trade that made him a couple $1,000s as a result of something we were covering. It was actually CTM stock in a trade we made. And he said, just had the third session yesterday and it was great. The virtual stock trading system has already had a huge impact on my trading style. And before VSTS, I was making money consistently, but the stress level was through the roof and I was chained to my PC for about 10 hours a day. Now I'm making at least what I was and able to set it up so I can actually have a life outside of staring at a wall of monitors. It's funny because he writes this and it sounds like the perfect testimonial. Like shout out Lawrence. It's like when Will talks about other investors, he says, I found it a little intimidating thinking traders who work on Wall Street and make millions. But in our Q&A session, I realized they're like me, trying to learn better ways, make more money consistently, and have a better life. Not intimidating at all. He says the Zoom format's so much more interactive than using comments like we do on the live trading. And he enjoys occasional sessions where we have Zoom to discuss various topics. So, by the way, he says, I'm not shilling for Will. I'm just giving my honest take and evaluations on the VSTS, the virtual stock trading system. So I share that with you guys so you have a, kind of good look. Outside of like the earnings, which we'll be releasing tomorrow for the upcoming week, which we do every week, and all of our targets, there's also this book. If you ever guys need that emotional, to work on the emotional side of trading, this talks about this book. I wrote it a couple years ago and there was no ChatGPT or anything like that. I wrote this book and I break down the ordinary versus the profitable. And I actually wrote it for myself because at the time I was learning how to differentiate between like emotions, FOMO, pump and dumps, or just like trading to trade versus focusing on the risk to reward and the trading plans and all that. And so I put it all together. It talks about the mindset, even like how to learn, like how do you actually learn, not just like what to learn, but like how do you learn, and also examples of trading plans. And the best part, in my opinion, is like the emotional IQ. We talk about that a lot, but this section could be really helpful for you. So anyway, it's included inside of Stockmate, and you also get a free t-shirt when you join. So we got a free t-shirt in Stockmate. If you guys want to take advantage of it, I got a special discount for all of you tuned in here in the second link in the description. So I would love for you guys to join us in our market live session on Monday at Market Open, and see you there. How it works is you go to the page, you can see the sign up, and you do lifetime access. That's when you get the free t-shirt as well. And then you get a link in your email tomorrow morning. You'll get a link in your email that's or not tomorrow morning, Monday morning, 15 minutes before market open. You get a link in your email, and we're working on getting the text messages right now, so that's going to be next. That gives you the link to our live session, our private session. You get into the session, and I'm there, and I'm giving the full overview of the markets, as well as making the trades right in front of you. And every trade that we make, we have our plan, and you get the entire plan for the trade. So it's pretty exciting. It's dynamic. You know, the markets are always moving, but one of the things that makes a difference too is having that plan. So we use the profit calculator oftentimes, so you can see exactly where my entries and my exits are and what we plan for the day. And would love to have you there. So if you ever want to surround yourself with other like-minded traders and investors, it's the second link in the description. And if you want that virtual stock trading system that Lawrence was talking about, it's the first link in the description to have a look there. So if you get the virtual stock trading system, you also get access to our new software and one-on-one calls with myself, the weekly Zooms, and you get Stockmate as a bonus for free when you join the virtual stock trading system. So it's a sweeter offer. It's the next level, but it also has the one-on-one element every week there with myself. So if you like it, it's the first link below. Thanks so much for watching, guys. I appreciate you all. If I earned your thumbs up, make sure to hit the like button. And I really enjoyed doing the live session with you all. And I appreciate you. Thanks so much. We're almost at 20,000 subscribers. Got some new tech coming out and some new content for you guys that I'm excited for you all to access. And have a great rest of your weekend. See you guys in the next video. Take care. See you guys.